Hi, everyone. This is Uncle Kevin. Thanks for joining me. Today, I have a special guest, Tony Paulo. He is executive consultant from Fedgroup, and he's going to talk to us about the investment product, Fedgroup Participation Bond. If you have not subscribed to my channel, please subscribe and hit that notification bell. So Tony, welcome to this channel. And finally, we are able to overcome the technological challenge and talk about the wonderful product you represent. So first of all, talk to us about Fedgroup. Who is Fedgroup?
Kevin, thank you so much for inviting us. I'm saying us because I represent Fedgroup. It's 100 people that work there. So who is Fedgroup? Fedgroup is a group of companies under the banner of Fedgroup that we have many facets of the insurance industry, financial services. So we have a life company, Fedgroup Life. We have a fiduciary company, Fed Trust, that does wills and trusts and business trusts and family trusts and that type of work. We have a property management company called Field Space, previously named Fedprop. We have a participation mortgage company, which is a specialist investment product called Fed Bond. And the company has got other projects such as impact farming and so on. We're quite innovative. We've been around since 1991. And in the last 30 years or so taught us is that we will stick to our strengths. So the group is not a young group. It's just over 30 years old, but we own our destiny.
Thanks, Tony. So what is Fedgroup Participation Bond?
Okay, good question. Very good one. If most people with a banking background would know what a deposit is, a 5-year fixed deposit. So our product, the license itself goes back to 1956, but we've had it since 1991, January. Participation bonds, what are they? It's an investment that combines consistent returns with total capital security. The structure that supports our secure investments, part bonds, is a collective investment scheme. It's the good old CIS. So it's very structured according to legislation. It is therefore subject to strict regulations from the FSCA, which was the previously named Financial Services Board, making these types of investment exceptionally low in risk.
How is this different from a 5-year fixed deposit?
So the 5-year fixed deposit at the bank, in process, in utilization, works the same way. A customer goes to a bank, the customer comes to Fedbond, puts in his or her or its, can be a company, as long as it is a taxpayer, will put the money into our 5-year fixed product or the bank's product. And obviously the intention is either to collect income monthly or to save for the 5 years and maybe change the way that's the interest is collected monthly. Some people may need it maybe after 12 months. So there's a lot of flexibility of when and how one collects the income. However, our product, the most attractive topic or points in our product is that due to our fee disclosure, which is nil, as you are aware, our total expense ratios, our transactional costs, which is very important. Transactional costs could cost you a lot of money at the bank. We don't have those. We don't have total investment charges. We don't have portfolio fees, an initial fee, a performance fee, or even an annual service fee. We have none of those. Our product's quite unique. It's based on a bank of properties that we finance, which are commercial, industrial, and retail only. We can't finance land or homes or any of the likes. And it's a very, very tight and regulated environment. You know, Deloitte is our internal and external auditors. They make sure that the book runs. But we must have been very good managers for the last 30 years because remember that these assets, these deposits, don't sit on our balance sheet. They are a company separate to us. We are the managers of that company by making sure that the deposits are legal from a proper bank account. It's made within the laws that regulate them. And the financing side, we obviously experts at it. We've been a bit longer than 30 years in that business. And we make sure that it works. It works for the depositors and it works for the borrowers. That's basically how the book works. As banks work the same way, but their collection of interest from borrowers is varied. It's from cars, from credit cards, from personal loans, overdrafts, homes, commercial, industrial, and retail properties as well. They get the interest rate that they charge from a very different array of clients to us. We're very restricted.
Tony, thanks for that. What you have explained and about low cost, how you go about lending money, etc. That leads nicely to my next question. Is participation bond safe? If general public look at your big banks, your FNB, your Standard Bank, etc., they say there's a big bank behind my deposits are safe. How about participation bond with Fedgroup behind it?
I love it when you say my money is safe at the bank. Well, tell it to the banks that can't say that. A bank's balance sheet is a sophisticated mechanism, a very well articulated set of accounts, and they give you money for you to give it to people. It varies and so on and so forth, up to the 5 years. Our security is the pot bond, the secure investment. The investment is secured against all the bonds. It's a book of deposits that is secured by a book of financed mortgages. Now, we're only allowed to lend 75% of a sworn evaluated number. If a building is worth 10 million, for example, a little office block or a little factory or a little shopping center, we can only lend 75%. Unlike our brick and mortar, which is a proper value of 10 million, for example, the maximum debt we can incur is 7.5 million or 75%. So in the last 30 years that we've had this license, that we've been the managers, that none of our investors have ever missed 1 cent, 1 single cent of their monthly income, be it paid out to their account in advance monthly or reinvested, capitalized into the lump sum. Our investors have always received, and the capital remains absolutely secure. That is the basis of the security and how safe our product is. It's a very tight balance sheet. It's well controlled, and the safety remains because we don't take chances where we lend. Our responsibility, 99.999%, is to the depositor. The borrowers can go anywhere. They can go to any bank and borrow their money to buy their office block or factory or shopping center. But a depositor is who actually funds those purchases, and we have to be responsible for them almost 100%.
So Tony, who should invest in Fedgroup Participation Bond?
What a great question, Kevin. You keep on rolling the good ones, huh? Basically, anybody, as long as you got a tax number, any taxpayer, because we need a taxpayer because we have to report via an IT3B, which is a legal and formal SARS document, how much interest has been generated for the tax year. Anybody can save, but a high percentage of our investors, our depositors, our participants, whatever you want to call it, for the last 30 years, and it's a high percentage. I would say the book varies a little bit every now and then, between 75 and 80%, are people needing income, people over the age of 55, and basically that is the type of clients that we attract. Because of the numbers make sense. Our interest rates are very competitive. We're never out of the top 3 on an interest-based 5-year fixed deposit basis. And our competitors respect us like we do the other way around. But That's the type of client that we tend to attract.
And what is the minimum amount to invest in such products?
That is a question that sometimes I answer with my hand in front of my mouth. It's a mere little 5,000 rand. A product like this,
5,000 rand.
5,000 rand, single premium. Yeah,
affordable.
I look at similar products out there for the rates that we offer. If you go to any of the banks, I doubt if you're going to find one bank with a similar rate within 0.25% or thereabouts of us, either up or down from us, that the deposit would not have to be at least 100,000, if not 1 million. And sometimes even age criteria has to kick in. You have to be over the age of 55 or over the age of 65 to qualify for their top rate on the 5-year fixed deposit. We don't have those criteria. Yeah, it's very simple to invest. It's from 5,000. We do attract very large lump sums in the tens of millions, but simply because people need competitive income to still run some form of business post retirement or post sale or whatever. But yeah, it's incredible. 5,000 rand, the minimum deposit. Yeah, okay. that it is.
And people do pay tax on the income?
Absolutely. And it's a 5-year forward-looking rate from an interest-bearing deposit, identical to the banks. There's no difference. We annually issue at the end of February every year an IT3B that declares to SARS and to your client, and via you, of course, how much interest, in between inverted commas, income from interest, your taxpayer client has earned.
I read up your brochure, and there are 2 options. One is called the income option. The other one is the growth option. Can you just explain to us the difference between the growth option and the income option?
Oh, we try to keep it simple. Some people might put a lot of different things about a product, painted and put many pages. Okay, so the growth option is when the client gives you the lump sum, whatever, from 5,000 to whatever amount the client decides to invest, and just leaves the money alone for 5 years. The result at the end of the period, using the interest on top of interest, like a compound effect, it's called in banking terms, in our world, not the insurance world, it's called an effective rate. That is simply when a client has not cashed in, is not banked any of the amounts grown every month from the interest generated. The income we then pay if the up to 100%. The client does not have to take 100%. Often the client takes less than 100%, 80, 85, 70, whatever it is, simply because they don't need that much. So rather build some money on the side as well. So we pay interest income on a first working day of each month, which is not necessarily the first. Sometimes the first is a Saturday, which we will pay on a Monday, which is the third. If there's a public holiday, it does confuse some people like me, but it will be paid whenever the first working day of the month is in advance. We pay our income, interest-based income, in advance monthly. Now, between those 2 options, the income and the growth option, the client can change his or her or its mind many times. Via you, the client can serve an instruction: stop paying my income. I don't want my 100% income this month. I only want 20% for the next 6 months. Or don't pay me for the next 2 years. I've got a contract. I get a salary. I don't need income. Whatever the scenario is, multiple, hundreds of thousands of different scenarios. And the client can do that at no charge whatsoever. And that is a huge advantage that we have against the other institutions that have identical, or if not the same product, the 5-year fixed deposit. That's huge.
The flexibility sounds great. What are the requirements of investing in participation bond?
Okay, I've mentioned the tax number. I've mentioned the minimum of 5,000 rand. Obviously, it's all tied in with your professional advice, your your qualifications, your degree, and so on, and the way that you've sit down with the client and do your advice. But basically, to keep in mind is that from 5,000 Rand, it's an interest-bearing deposit. The client must decide from the beginning, must decide where to go, either growth or income, knowing that can change his or her mind. Although many don't, they may adjust it slightly or stop it altogether or start the income altogether because their requirements have changed. But to start is just to phone Uncle Kevin and say, Uncle Kevin, I got some extra couple of million and I want to put them away.
Yeah,
basically that.
When the clients are looking to invest, obviously looking at the needs of the clients and the term, time horizon and risk tolerance of the clients, and also in terms of the tax considerations, and to see whether the group is participation bond is a suitable product. But certainly it sounds very attractive. How often does an investor receive investment statement from Fedgroup once invested?
Okay, we obviously can generate, if you had to request us for a client every second week to give you the balance, we would. A quarterly statement, we feel it's enough. If the client is receiving his or her income or its income or not, a quarterly statement keeps everybody in touch with each other. We can change it to 6 monthly, we can change it to once a year, you can change it to monthly, but it's all to do with how yourself manages your client's affairs financially. You do the serious stuff, you've got all the serious degrees, and we've got the product to fit in your advice. Hopefully that is the formula to fit within your advice.
Yeah, Tony, I like the fact that with such products, it's not subject to the vagaries of the market, the ups and downs. For some clients, I actually check their portfolio on a regular basis because I want to keep track whether it's going up or down. But with this product, it's just peace of mind. It's going up steadily, and every month or every quarter when you receive the statement, then you can see it's going up. It's not going down. Yeah. And Tony, my last question is that what, as an investor, needs to withdraw within 5 years? Are there any penalties?
Okay, so about 6 or 7 years ago, we didn't have that facility. The client was invested. It was almost impossible for the client to get out because the rate it's 30-40% higher than, if not 50% higher than a 30-day call account. And because of that, you have to restrict the access. It's just a natural thing that happens with this type of product. And the banks do the same, although the banks have always had penalties. We have a thing called an early withdrawal fee, EWF. And it works very simply. To be fair to every depositor, it's not a set fixed percentage of the amount taken out or anything. It's relevant to what the interest rate for income is for each client. For example, if a client gets 12%, for example, for income, it doesn't happen, believe me, it hasn't happened for 2 decades. It just simply means that every month there's a 1% being paid out, if you think about it. So the product is a 60-month product. So what do? That initial nominal rate which is the rate for income, it's not the effective rate, it's the smaller one which pays income every month. You divide that by 60 and you get a factor, call it 0.15% of a percent. The client after 40 months approaches you and says, listen, I gave you R1 million 40 months ago. I now need to access either the million or 100,000 or 50,000 for medical, for financial reasons. The medical side will be some operation, some doctors to be paid. And the financial side, things hadn't gone well, maybe the business, whatever it is, whatever it's happening in the life of that investor. And there's letters arriving in his postbox and emails, and the client is strangled, feeling a bit choked up. comes to you and says, listen, I gave you $1 million, I need 200,000. Otherwise, they're not going to operate me, whatever, that type of scenario, or they're going to repossess my car and my house and close my business door. Please, I need some money. I need this. So the way it works out is after 40 months, you've got 20 months left.
Sure.
Using the example of 0.15% with 20 months left, let's say the client takes 500,000 out, for example. You'll pay 0.15 times 20 months remaining, which is 3%, on that 500,000. That is called an early withdrawal fee. So if the client enters the scheme at 6% or 9% nominal or 7.5%, that percentage is divided by 60. So it's fair and it's only applicable to that investor only, or to the other people. They get the same rate. So it does not charge a fee that is for everybody. It's depends on the rate that you got at inception.
Right. Tony, thanks so much for spending the time with us and answering these questions, unpacking what Fedgroup Participation Bond is. And I think certainly there are great applications for many investors out there, young and old. And thanks for the opportunity to collaborate. Thanks for watching. If you like this episode, please give it a thumbs up. Until next time, bye.
Bye-bye. Bye-bye.